Hi everyone, welcome to Tuesday, and like we do every Tuesday, we take a look at the performance of the New Zealand Stock Exchange, being the NZSX 50. Before we jump across and take a look, I have to do the housekeeping, which is just remember that this is for educational purposes only, doesn't take your personal situation into account. If you're looking for that, you do need to go and have a chat to your own financial advisor. Right, let's take a look. You can see that I have got the S&P NZSX 50 up here on the screen. And unfortunately, last week, if I hold my cursor there, was a little down week. I'm recording this on Monday, so the market has opened. It's only been trading for just over about an hour, and we're about $82 down, or just over 0.5% down this week already. So it looks like at the moment, you can see where the dashed lines are. And if that is going to hopefully form a line of resistance, then if we keep touching that, hopefully eventually it might rebound back up. That would be a really good positive sign. Now, the reason I'm thinking this could be a line of support is because if we go back along, follow that dashed line, and you can see through this period here, which was sort of around July last year, it was forming a line of resistance, which means that the shares were going up, they were touching that line and hitting it, and then eventually they broke through, which you can see. Now what has happened, we've come back down, and we tend to be hitting this line, and it's now forming what we refer to as a line of support. So it just keeps supporting those shares at that level. That can be a good sign, especially if the more touch points that it has, which is what we're starting to see now. What we do want to see happen is for it to recover. If it falls through that line of support, then obviously the market is going to be in a downtrend, and again we need to heed with caution and just watch and wait and see what's going to happen. Because our market is trading where it is, I certainly haven't been looking for any new positions to enter. There were over the weekend quite a few positions where I was able to increase my stop losses, which is an encouraging sign. However, it doesn't mean that not all shares are actually driving this market. There's really only a handful. Let's jump over to the 1 year chart and see what that's telling us. And that's painting quite a different picture. You can basically see that every day, except Monday last week, every day the market fell. Again, it is sort of hitting that line of support in this case, but we definitely want to see it coming off. The thing, if I look down the bottom with this bar chart down here, that is showing where the volume is on those shares, so how many shares are actually traded. And naturally with the red bars, it means that was where there was more selling going on than buying. Now I've got a moving average on here, and that moving average is a 13-day period. And that's where you can see that line going across. Now, if the market, or a share for that matter, rises above on a green positive candle, that is a good sign. And if the red candles are below that 13-day moving average, that too is a good sign, because you're never going to get shares heading up constantly all the time. They will pull back. So what we're wanting to see is when a share, or the indices in this example, pulls back and has a sell-off, we want that volume to be a lot less than when there's buying going on. We want the buying to be strong and the selling to be shallow, if you like. Let's go back to the 5 year chart. Now I'll just pop on my moving averages. So again, we will use the 30 exponential, and just leaving it there at the moment, you can see that our market is still trading below that 30-week moving average, and it does look like it could be on a little bit of a downward trajectory, but hey, only time will tell us. We'll also go and put on our 15-period moving average, and that's a faster moving average. It gives us a bit more of an idea as to what's actually happening on the market. So I've spoken of this before. It closed around the 6th of April this year was when you saw that 15-week moving average cross through the 30, and now that our indices is trading below that. So that is something that we just need to be a little bit cautious on, and that too is why I'm not looking for any new positions. If we jump back to the 1 year chart, which brings these candles up to dailies, you can see that the moving average really did cross around the middle of the week, really around the 15th is when you could definitely get that clear sign where the 15-day moving average closed below the 30. So we want to see, for a market to be good, healthy and strong, we obviously want to be seeing more green candles than red. We want to be seeing these moving averages pointing up, and we want to see that 15 period moving average above the 30 period moving average on both the yearly and 5-yearly chart. You can see that the market is trading below both of those. So this is why we need to just sit back, wait and see, and opportunities will come. And I think I might have said it before, there is a saying that I quite like. It's times like these that it's always good to remember that there's always been times like these. So just remember too, I'm helping a number of people with their own share trading journey one-on-one, and a lot of people are feeling like, oh, I need to do something, I need to put some money into the market. Now that's not always the case. If you are doing your research, following your rules, I'll stop sharing, and there are no buying opportunities, that's fine, because that means you are making a conscious decision. You need to have your set of rules and follow them. I've also seen lately as well a little bit of rhetoric out there with the use of AI and using AI to do your share trading or share investing, how to pick stocks, that sort of thing. Now, that can work. The thing to remember though, if you're going to use it, make sure that you are abiding by your own set of rules, that you're not just going off what AI is telling you, because AI is looking for the information that is already out there on a particular share, if you like. So quite often it may go to brokers' channels and what brokers have said about shares. And if you look at a broker report, there, as more often than not, they're promoting different shares. Very seldom do they put out a cautionary sign about a particular share. So this is the information that AI is taking. So make sure that you've got your own parameters as to what you are going to be using that for when you're looking at your shares. The other thing to consider as well is that people's emotion is always the same. So when the markets are going up, people are euphoric, they're positive, what can go wrong type of attitude. But people also get a little bit cautious. Apparently there's research out there that people are more frightened of giving back money to the market when a market is trading up than what they are when a market is trading down. So that's something that you need to be aware of as well. And because people's emotions don't change, that will then flow through to the performance of a share market. So when people are getting nervous and worried, even though they might have followed a set of rules on AI that may have got them into a good position, the emotion comes in and does tend to take over. So for me, I don't personally use AI. I've got a full set of rules that I use when I'm looking at doing my trading, and I heed by them. So no matter what the market is doing, what I'm potentially hearing out there in the marketplace with people talking, because there are a lot of people that like to say that they're share experts. And to me, it's always about cutting out that noise. I don't listen to that sort of thing. I abide strictly by written rules that I have, and that is where I do my share trading. So I hope that's helping. I really want to help you as well with your share trading. If you are wanting to get on board, get started, then I do have a self-paced course on learning to invest. It takes everything right back to the basics, because that's also something that I'm seeing a little bit as well, that people are wanting to get started, they're wanting to get involved, which is great, but they're really not sure where the beginning is. So that can be a really good course if you are wanting to get started. But like usual, if you've got any questions at all, if there is a share you would like me to review, reach out, let me know, pop it in the comments, and we will do a video on it in the future. So until Thursday, take care.